Welcome to Magnet Minutes. I'm Jordan Kimmel, and rather than a regular update, we're going to spend some precious minutes with legendary investor Jim Rogers. And Jim, thanks so much for joining us.
Jordan, but I'm not a legendary investor. I'm a simple person from the backwoods of a small state.
Well, we'll get into that a little bit too, but I like to call you legendary because we first met. I had the pleasure really of meeting you in a green room. We were both going on the same television set, but you were excitedly talking about now your second trip around the world. And man, what you were talking about, I knew you weren't an ordinary cat. So I ran out, I got your everything I could to read up on you. I've seen you a couple times, on the show since then, but Jim, I've read every one of your books. You've been really delightful enough to spend time with me before. So we're going to share some old stories. We're going to get into the market, but I have to just share before we get into it. Jim, when you wrote Investment Biker, this is when you took your motorcycle and visited every country and basically opened up an account in every country, which was mind-blowing, right? And then I met you. You were about to start your second trip. And on that second trip, instantly, you closed a bunch of accounts. You brought us up currently, but folks, if you haven't read Adventure Capitalist, if you haven't read Investment Biker, these are not only investment books, they're history books. They get into the currency, the regimes of each country, and they're literally, Jim, unbelievable. So you then took a little break, I know, and right at the right time, you wrote Hot Commodities, which I think you probably want to talk a little bit about right now. I have two sons. I gave them both a gift to my children, which I didn't write, you wrote. I said, you have to read Jim's book. They're street smart. So folks, Jim is not only one of the most experienced investors, he's one of the most interesting investors, and also willing to be a little bit provocative, okay? So Jim, on that introduction, let me just say, we're in this era right now with, fast money, fast trading, hot money. As a young man, you actually produced with your partner one of the highest returns ever in the hedge fund business, the quantum fund. But what you shared with me is the level of conviction in each trade, the level of homework in each trade. And I want you to talk a little bit, about that style, if you would.
Gosh, Jordan, I should hang up while I can. After all of that, I cannot live up to that introduction. Well, in those days, we both loved what we were doing, and I did the research, and I loved the research. And as long as we thought we knew what we were doing, it was somewhat easier to live through bad times or corrections or when the market went against you. The market has a habit of always going against you to show you that you're not as smart as you think you are. But it was always good if you had done your work. I try to tell people all the time, please do not listen to hot tips, because then when things go wrong, you don't know what to do because you don't know why you bought it in the first place.
Right.
So you should pay and invest only in what you yourself know a lot about, because then when things go the wrong way, you know what to do. And nobody wants to hear that. Everybody says, okay, I understand what you say, but give me just one hot tip. Just one. Just give me one. I want to be rich this week. Well, everybody does.
But Jim, here's the thing. Let me share a personal weakness. When anything goes against me, I have a tendency to sell down and not to want to fight the market, so to speak. But I know that you've talked about your conviction of the level of homework you've done, and therefore you have been willing to sit, wait, be really patient, and I'm guessing maybe even average down time to time.
Well, first, Jordan, I want to remind you, I make many mistakes. It's not, we can have a whole show about my mistakes if you want to, but yes, if I think I know what I'm doing, And if I think the market is wrong, and the market is very often wrong, nearly always wrong, then I can act. But if I'm just listening to some guy on the internet, I don't know what to do. And it's very difficult. And in a case like that, then I probably would just sell down. I hope I would be smart enough to get out when I don't know what I'm doing. But I don't like investing when I don't know what I'm doing. Doesn't mean I don't make mistakes. Jordan, you want to hear about my first wife? Oh my God, what a mistake.
Well, maybe we'll save that for another show. But I know that, your second wife and your kids and your life in Singapore has been, a great ride for you. And, we all do make mistakes, but the fact is your compounded return and your results literally speak for themselves. There's a lot of folks who like to tell you what they've done, or like to tell you what they think they can do. We know you've done it. But again, maybe what I'd like you to do, if you wouldn't mind, maybe there's a couple of special trades. I know there's some stories from your books I'd love to talk about, but there are any special trades or anything that maybe was going against you, but then tides turn, circumstances change exactly like you thought they might, and you cleaned the house?
Well, one of my early great successes, I hadn't been in the business very long, but I decided the market was going to collapse. And so I took all of my money and I bought puts.
Okay.
In a time when everybody was wildly bullish.
Mm-hmm.
And lo and behold, Jordan, 5 months later, I had tripled my money. And I sold my puts. I reversed the position the day the market hit bottom.
Wow.
I said to myself, I am so smart. This is so easy. I'm going to be so rich. And I waited for the market to rally, which it did. And 2 or 3 months later, I sold short. I sold 6 companies short.
Okay.
Well, Jordan, 3 months later, I was wiped out. I had nothing left.
Wow.
And I will tell you, all 6 of those companies eventually went bankrupt. Didn't just go down, went bankrupt.
Wow.
And yet, I learned that the market, I had to understand the market as well as what I was doing. And I had to understand that a lot of people didn't know what I thought I knew and that they would act accordingly. And I had to adjust to what was going on around me. It taught me I didn't have staying power. It taught me a lot of things. It taught me about trading, how bad I was at trading. No, it taught me a lot of things. It was a good lesson. I tell students when I speak at universities, guys, it's okay to lose money if you learn from it, but do it when you're young. Right. Don't go bankrupt when you're 65. Go bankrupt when you're 25.
Man. That's pretty good advice. And again, battle tested, battle scarred is how you learn. And hopefully, again, I like to say no one won their first game of chess. It's a matter of being persistent, learning from everything you do wrong, everything you do right. And we're going to get into, the current market in a couple minutes, in the future market. But, Jim, let me just ask you this, because I think you're labeled very poorly by some people who don't know you well enough that call you a permabear. And I know that can't be the case because of the years of running quantum. You couldn't always been a bear, I don't think. And so there are times when the market is healthy or when it's future productive. There's other times when there's a leak about to burst. But just correct the record if I'm right that labeling you a perma bear is absolutely out of line.
Well, sure, Jordan, but that's okay. I mean, there are a lot of people in the world who don't do their homework, who just want to give you an easy answer, and that makes it easier for people to do that. It's like the market. They don't do their homework. Most people do not do their homework in the market. They take the easy answer and they run with it. No, I've seen those comments before too. But maybe that's because and I'll tell you one recently, I have said in the last year or two that the next bear market we have is going to be the worst in my lifetime. And I explained, 2008, we had a bear market because of too much debt. Well, since then, the debt has skyrocketed. Right. So when we have a bear market again, it has to be the worst in my lifetime. That's a simple fact. But people who are not either cannot read or not very smart or don't do their homework say, there's Rogers, he's a bear. That's not a bearish statement. That's a fact that the next bear market will be very bad. I mean, if they want to argue with that, I'm quite happy to discuss it, but that's not what happens in people's mind. They just take the simple answer and say, Rogers is a bear. That's not a bearish statement. I don't have any shorts at all right now. I'm totally long.
Really?
But
surprised.
When I'm not 100% long because I have cash, et cetera, but then commodities and other things. But I don't have any shorts. I haven't started selling short yet. So, but people take that statement, simple statement of fact, and then turn it into something and saying, oh, Rogers is a bear.
Well, I think what you
that's
want
because
is
they
probably...
can't read. And I would say to them, is English your first language?
Well, I'd probably say, you're adaptive, and willing to, wait the time. And so you brought up something about the easy way out. And what I'm amused by is, frankly, people that are just simply trading on moving averages. And a lot of people just say, the death cross or the positive cross, and the trading and algorithms, a lot of them are written simply based on moving averages. My model, Magnet, looks at several factors, all fundamental. I'm just curious, Jim, are there any priority to fundamentals, whether it's cash flow, certain valuation metrics? Are there any factors like you could identify that kind of are your most powerful decision makers?
Oh, I wish.
Or do you think of it different ways?
Jordan, I wish it were that easy. I guess the answer is you should read Value Engine. Well, I will say I usually start with the balance sheet because I want to see what this company is or what it's all about. And the balance sheet is very instructive in that way, but that's not the most important. That just tells me about the company or the other companies in the industry. No, it's supply demand. I mean, you have to know supply demand, especially if it's commodities or something like that. But supply demand is important for everything. I wish I had an easy answer.
Okay.
It's a lot of work to do it right.
So supply demand, you're talking about point and figure charts? You're talking about charts?
No. I'm talking about if we're talking about investing in Ford, what's the supply demand situation for automobiles? What's happened with car sales over the last 10 years or so? People bought a lot of cars and they're likely to be, and there's no inventory. No, I'm talking about supply demand in the marketplace. I'm not talking about stocks. I haven't gotten to stocks yet. No, I'm talking about the real world. Are people going to buy more cars or fewer cars? If so, why? And where are they going to come from? They're going to come from Japan. They're going to come from Detroit. Lots of things one has to, at least in my mind, lots of things that one has to know. And it's still not easy. I wish, I used to be, at times I was a professor, and the students always want, I said, listen, there is no chapter 3 that you can read and make this easy. There is no page 37. I wish I could say to you, all right, turn to page 37 of this book and you'll have the answers and then you'll be rich. I wish it were that easy. I don't know an easy way.
Well, Jim, I'm not as prolific a writer. I've written a couple books. My first chapter, my first quote there, I don't have it in front of me, but really talks about how difficult the market really is and how it's not easy, and how, I think it's comical when people say they could sell you a program and in a half hour you can conquer the market. We know how hard it is. And frankly, if it was easy, everybody would have the luxury vehicle. Everyone would have the big mansion on the hill. And we know there's a bell curve and not everyone kind of fits, into that right tip of the bell curve. So what I want to do is let me, kind of bring it up, to the present moment right now. And I'm a real believer in the now, the present moment. There's a lot of people that will tell you what the future is going to bring. I don't think that they really know what the future brings. You make an interesting point about looking at long-term trends and kind of drawing out of those trends and where things are going. But Jim, this is not my first rodeo. It's not my first year in the business. I've been in the business 35 years almost, but there are things taking place in this market that are brand new to me or brand new to the market itself. And those things are, for the first time I can remember in years, the administration, the market, the pundits are admitting to inflation being real. And this nonsense of 1% and 2% inflation that they've talked about forever, I think was nonsense, that it's now, aware there's going to be more inflation. The second thing is interest rates have just gone straight down, literally my entire career, minor blip up. I remember being on the floor of the exchange on a show when they mentioned that rates will be zero for the foreseeable future. That was nonsense. It was hard to believe. So the economy's been on this life-supported zero interest rates. We know that's changing, and we know that the environment right now is something you've talked about for a couple of years right now. Too much debt. Why don't I let you take over here, what you see is unfolding and some of the dangers, and then of course, how you're going to play it, your opportunity.
Well, Jordan, I'm a little bit older than you because we have had inflation before, and in the 70s, there was serious inflation, which even in Washington, they came to understand finally and did something about. In fact, Jimmy Carter was the president at the time. It was devastating to him, to his presidency, but he called in a guy named Paul Volcker and said, okay, you should be the head of the Federal Reserve, the central bank, and whatever you have to do, you do it, and I will support you. Now, Volcker was a long-time bureaucrat at the time, but he understood the markets, and he understood that he was going to have to raise interest rates very, very high. And he said to Carter, I'm going to have to raise interest rates. And Carter said, okay, you do it. Whatever you want to say about Jimmy Carter, he had enough sense to say to Volcker, okay. And it cost Carter his presidency, right, by the way, because interest rates went to over 20%. But he said to Volcker, you got to do it, and you do it. And Volcker said, are you sure? Carter said yes, and he did it. And of course, it destroyed the markets, it destroyed a lot of things, but it certainly destroyed inflation too. So we didn't have inflation for a long. So this has all happened before. And you and I both are not old enough to remember in previous generations, previous centuries. This has all happened before. Jordan, it's not the first time we've had bear markets and inflation and other things like that. And we will have them, some of the things are happening again right now. SPACs. Every time, not every time, but often after a long bull market, here comes SPACs.
There you go.
This new thing called SPAC. SPACs have been around 300 years. The first SPAC was in the 1710s or something. And the offering circular said, well, we're not going to tell you who we are. We're not going to tell you what we're going to do. But if you give us your money, we'll make you a lot of money. Literally, that's what it said. Now, it wouldn't be allowed now, right? But that's what the first SPAC said. So all this has happened before. Just about everything has happened before. There are some things that are a little different. Now we have cryptocurrencies, but there are always new things that come along in every bull market. And Jordan, it always happens that new people come into the market and they call up their friends and they say, I've discovered this new thing called the stock market, and it's so much fun, and it's so easy. It's easy to make money. You can make a lot of money, and it's easy.
You don't have to work.
Yeah, they all call their friends, and they all talk about this easy thing called the stock market and how much fun it is and how much money. Jordan, you're not old enough to be able to remember all of this kind of stuff or to have read about it. But
hold on a second, Jim. That's the point, is that I try to read everything. I read about the tulips. I've read about, obviously I was a young I was in school when Volcker was breaking the back of inflation. I wasn't yet in the business, but certainly, Jim, I think you need to read about it. And I like to tell everybody, whatever they're in love with today, even the stock of the decade, we know there was RCA because everyone was going to buy a television, and everybody did. There was Eastman Kodak because everyone was going to buy a camera, and everybody did. There's going to be airplanes flying everywhere, and there was, and Pan Am. All these companies, which were market leaders, just got destroyed because they were overloved, overowned, and people didn't care anymore, to the level about what they were paying for. So I know it's a cycle. I'm just saying that I've seen bear markets, Jim. Look, the dot-com bust, NASDAQ lost 86%. I mean, that's beating the heck out of something. 2009, I had people telling me that the world was literally going to end, the financial system was going to break apart. And then just 18 months ago, 20 months ago, when this, COVID hit, the market went into the fastest decline of 35% ever in history. So I guess my question to you is, I do agree, and I'm surprised you're not short, because I have been shorting, and I see companies at 200 price to sales, forget about PE. So I have been shorting, but the question I ask you is, it seems that it still takes 3 minutes to boil an egg, at least certain a 3-minute egg. It takes 9 months to make a baby for a human. But the point is, bear markets seem to have gotten shorter and shorter, and the cycles shortened up. So I agree that something bad's coming, but do you think it's going to be a decade long, or you think it's going to be a washout where margin players are crushed, and then Humpty Dumpty somehow gets put back together again, and all this capital in the world says, I need a place to invest? Any ideas how it's going to unfold?
Jordan, the world is going to come to an end. I assure you, in the next bear market, everybody is going to tell you, Jordan, it's the end. The world is coming to an end. This is finished. Get out, run, run, run. We're going to have bear market. You can go back and look at every bear market all over the world. And during the huge declines, everybody is panicked and everybody is convinced the world is going to come to an end. Not just the world as they know it, the world.
Right, the sun will not come up again.
It's horrendous what's going to happen. But in my view, for what it's worth, when we have the next bear market and the world comes to an end, it's certainly going to last longer than some in our lifetimes, because the debt is so much higher. I mean, never in the history of the world has the debt been so high. America is the largest debtor nation in the history of the world, and it gets higher and higher every day. But not just the US. I mean, in Japan, I cannot comprehend how much debt they're taking on in Japan and England and other countries. I mean, it's mind-boggling. So I would suspect that the next bear market is going to be, to repeat, the worst in our lifetime, certainly the worst in my lifetime, because of so much debt, and it will last longer than what you and I are accustomed to.
Wow.
And the world will come to an end.
And it will not come to an end. And so I'm a believer in sentiment. And when people want to buy the next SPAC and people want to buy the next coin, I mean, the music was getting so loud, Jim, it was clear to me that there was a top being put in. I'm a believer when people are not asking what to buy, is it a good time to buy, but they're saying, I'm never buying again. I'm still saying the market will rise again. And as much debt as we have, something I learned from your book, and something very few people know, maybe you want to just tell the specifics. The next time the US defaults on its debt will not be the first time.
Of course.
But most people don't know that.
I know, but Jordan, all countries have defaulted on their debt at one time or another. But Jordan, I will tell you that the next time the world comes to an end, you should buy.
Well, let's make a deal with each other. So the next time the world does end, I'm going to visit you in Singapore or wherever you are in the world, and we'll look at each other and say, the world's about to end. Why not buy?
Well, Jordan, I hope we can afford it. I hope we can afford to travel next time the world comes to an end. I hope we don't get wiped out when the world comes to an end again the next time. But it will, and I don't know where one should buy it that when the world comes to an end again, or what, or anything else. But I know the world is going to come to an end again. And I know the great fortunes will be made by somebody who's smart enough to act when that happens.
Well, Jim, listen, let me just say, it's delightful. It's so good that you joined us. I could literally talk to you all day. The market's going to open up rude again tomorrow. We don't want to get in the super short term here, but what I believe is the stair step has already started on the way down. I have been selling short. I am right now in the midst of restarting Magnet Fund based on the long short and based on the fact that there is cash flow some places, but there are also mirages in other places. It's hard to believe how high certain things have been bid up in just basically the I'll buy anything program. And so, Jim, I'm going to ask you again soon, one day, to join us again. But we've been delighted. We've been tickled here to have you again. So here's what I'm going to ask you is, until the world does end, stay safe, enjoy your family, and keep us reading the tea leaves as you see them. And thanks for the time one more time.
Thank you, Jordan, and thank all of you. Thank Value Engine as well, and let's hope we both survive when the world comes to an end again.
I think we're going to, Jim. I'm going to sign off, and I'll see you real soon. My pleasure. And Value Engines Magnet Minutes with legendary Jim Rogers has to come to a conclusion. We'll see you again soon. Thanks again. Bye now.
Thank you, Jordan. Bye-bye.